Welcome back. You're still tuned into Midcap Radar. Well, Salasar Techno Engineering is surging in trade today. The company has commissioned a new zinc galvanization plant of 96,000 tons capacity. This is in Uttar Pradesh. This plant will meet demand for galvanized products in industries like transmission line and monopoles as well. The company has also bagged an EPC contract worth 75 crore rupees from Energy Development Corporation in Africa. So a lot of updates that's happening here to discuss the order book and what these new updates mean for the company. We are now joined by Shashank Agarwal, the director of Salasar Techno, to throw some light on this. Mr. Agarwal, good afternoon. Thank you so much for joining us. Well, let's first talk about this zinc galvanization plant which is commissioned. You had spoken about it in Q1 numbers as well. Can you give us a sense of what the capex outlay has been here? The 50 crore revenue number that you gave earlier, at what capacity utilization will you achieve that? And what is the peak revenue potential here?
Okay, so basically the capex done is close to 55 crores for this galvanizing plant. And this is going to help us grow our businesses, transmission line monopoles, especially the large diameter size transmission line monopoles, which is the flavor of the time. And of course, in terms of the capacity, the plant is going to be operational at a capacity of almost 8,000 tons per month, which will turn out to almost 96,000 tons per annum. And with respect to the revenue figures, this could give us a revenue of almost 700 to 800 crores per annum in terms of our total sales value.
So you're saying just this new plant will give you incremental revenues of 700 to 800 crores per annum?
Yes, when we are operating at the full capacity, this will turn out to be almost 700 to 800 crores of revenues.
Okay, so I'm just reading from what you had said in your conference call in the last quarter. You're saying that right now we have 3 galvanizing plants which are running in 3 units, and in one of the units, that's unit number 3, we are putting up a new galvanizing plant. And probably when this plant starts, we'll put the existing plant in a standby mode and utilize the capacity of the new plant, and this should give you additional revenues of 50 crore from that plant alone. So could you explain that versus the 700 to 800 crore?
No. So see, if you talk about only the revenues in terms of the sales value, the sales value of almost 96,000 would convert into 700 to 800 crores. Okay, probably that will be the profit figures, which would come into EBITDA level at 50 crores. This will be, we'll be able to add almost 50 crores of extra EBITDA if you are operating the plant at the full capacity. Yes, that's also true that one of the existing plants at Unit 3 would be put in a shutdown mode, and when we are utilizing the capacity of the new galvanizing plant.
Okay, so just to clarify, this new galvanizing plant with 96,000 tons per year of capacity will yield you revenues of around 700 to 800 crore rupees, but that would mean an EBITDA number of 50 crore rupees on that 700 rupees. Is our understanding correct?
Yes.
Okay, so that means it's an asset turn of 12.7 times, going by the investment of 55 crores that you've met. I wanted to understand the industry dynamics here as well. What kind of competition do you face here? Will you be one of the few galvanizing plant operators in the company when it comes to this?
So in the heavy structure division, yes, this is a unique proposition that we have. This is the largest plant, not only in India, but in Asia, and among one of the largest in the world, catering especially to monopoles. But it's not only limited to monopoles for power transmission lines. We are going to do other manufacturing also in this, structures for solar, structures for power transmission, structures for telecom also. And when we are putting one of the plants existing plants on a standby mode, the additional capacity what would be generated is almost, see, one of the existing plant which we are closing down, or rather we are putting it on a standby mode, is almost 25 to 30,000 tons. So additional capacity that we are actually generating is almost 65,000 tons.
Okay. So I calculated basis the EBITDA number that you gave us, the margins would be around 7.1%. What does it mean for your guidance that you'd given earlier of margins to be between 8 to 9%? Will this dilute your margins in any way?
No. In fact, being the new plant, and it's one of the high-tech plants which has been imported from Italy and partly from Germany, we expect the cost of operations to go down. and operate and achieve an efficiency of operations, which would actually should improve our margins.
So getting back to that point, 96,000 million tons of capacity will yield you revenues of 700 to 800. But one of your plants with a capacity of 30,000 is going to be sitting idle. You'll put that plant on hold, right? So there will be a loss of revenues associated with that.
Yes. So this plant on its own can generate a revenue of almost 700 to 800 crores.
Correct.
Right? But when we are putting one of the plants on a standby mode, the total additional revenue which will be generated to the balance sheet at the maximum level would be about 500 to 600 crores.
To 600 crores.
Oh, okay.
Yeah.
All right. So about the other contract that you won, 75 crore rupees from Energy Development Corporation. What does it take your order book to? What kind of order inflows are you expecting this year itself, and the split between export and domestic?
Yeah. So we have an unexecuted order book of almost 1,400 crores as on date. Out of which about more than 200 crores orders are in overseas EPC market in Nepal and Rwanda, and almost 1,200 crores of orders which are unexecuted in India at the moment. And also, I would like to share with you that we are, lowest bidder in projects worth 2,400 crores, wherein we are expecting the LOIs to be issued sooner than later.
Okay, all right. Thank you so much for joining us today and detailing these new updates that are happening in the company, Mr. Agarwal. So that's the word coming in from Salasar Techno. But for now, we'll slip into a break. When we come back, we'll discuss more on the markets and stock-specific action. Stay tuned.